Hey everyone, welcome back to the Trailline channel. This is Richard here with Ross Haber, and today we're continuing on with our Chart of the Week series, talking about the overall health of the market, since we did definitely take a hit last week and kind of resume that correction that we've really been in here. And we'll be talking through the chart of the Nasdaq Composite, both on the daily chart as well as the weekly. And if you do enjoy this video, please go ahead and leave a like down below and subscribe if you're new to the channel. And also make sure you check out the top 10 report video if you want more depth from Ross, as well as the top 10 report ideas on individual stocks they post every single week. So with that, Ross, if you could talk through this chart, what you're watching right now, key levels to be aware of, anything at all in terms of, the overall chart of the index.
Absolutely. I mean, we can take a look, like you said, at the daily and weekly and discuss some shorter term levels and some longer term levels just to give perspective. We'll see weekly, even monthly, how much perspective there really is from here. In any event, all of the averages last week ultimately stalled in the middle of the week at key resistance areas, rolled over to varying degrees. We can see here the NASDAQ undercut this area to the left of any, if we were looking at a potential head and shoulder, inverse head and shoulders pattern, with this being the left shoulder, this area being the head, and this we were looking for, we were trying to be positive last week, looking for a potential right shoulder to form here if leadership could have held up, but unfortunately leadership just fell apart with the indexes last week. There was no relative strength really anywhere to be found. There were a few stocks that held up better than most, but there was really nothing rallying unless you were looking at some inverse ETFs, of course, right? So that being said, on a shorter term basis, some levels we'll be watching. This is very short term and probably, just again, based on what leadership looks like, this is the more unlikely scenario, but I guess you never know, right? So we could call this, that Jesse Livermore 13,000 area between here and this low that we made back here in March. As Richard's pointing out, we have this area here, which we also broke below at that 13,000. You can see where it was support before. It is now resistance, right? And so between here and here, that's the first area where we'll be watching, and just to see how it acts. We're not going to be making, I'm not looking for any specific action other than if we did get an undercut, where we'd be looking for that undercut and rally scenario. So once it did undercut, we'd be looking for, a cumulative price and volume action from there, and of course leadership and that sort of thing. Let's zoom out here, taking a look at the weekly, which will give us some, let's call them medium term levels, right? So let's go down to that 12,000 area, perfect, which coincides with this prior high here. And you can see, I think if we draw this low, so there's another one there. If we did undercut, that would be that next little area that might make a difference before we tested 12,000. So those two red lines would be more of that. And honestly, it could be there in a hurry. 1,000 points is nothing in a week these days on the NASDAQ. So sometime next week, if we didn't hold that 13,000 area, this would be, like most likely areas we'll be watching for how the market and the leading stocks are acting. From here, there's a long way to go. Let's just look at the monthly for perspective. We were looking at this a little bit earlier, and I just simply drew this line right here down to roughly 10,000. And so, hey, Richard, does that really mess up this chart? And it really doesn't.
Not much. Yeah.
You can draw the trend line, right? So no matter how you do it, you've got a lot of room to fall without damaging this chart on the much longer term. And there's still a ton of stocks that were the stocks that held up the NASDAQ for a lot of this run, right? So from part of 19, 20, part of 21, steep move here was on the back of many of the stocks in that traditional area of growth, semiconductor, software, that sort of thing. And a lot of those stocks can still fall much further. Um, and without getting into the S&P 500 index, we saw plenty of those oil, gas, mining, and cyclical stocks really take a hit last week as well. And that's what's been leading. So, there's plenty of room for those. Many of those names are still just breaking 23-day moving average areas and haven't even visited the 50-day moving average. So they're holding up a little better. But at the end of the day, it'll be interesting to see, how it all plays out. Let's discuss leading stocks really quickly, right? So we'll be watching the big leaders were oil, gas, mining, and the cyclicals. So let's see how those are acting when they get near those 50-day moving averages or 65-day exponentials, that area, assuming the weakness continues. If those can start to act constructively and the market can start to act constructively at logical levels, and we can start to see some encouraging action once again in the more traditional areas of growth, great. But for now, this is the worst the market has looked in terms of the major indexes and its leadership all at once at quite some time. I'd say it's been a while since the market has really looked ugly, but we haven't been able to point to something that was holding up or rallying or looking okay. And it really looks like a matter of the few stocks that are holding up. It'll be a case of the last soldier standing instead of the few outstanding spots of relative strength that will save the market. At least that's what it looks like now. Who knows what happens on, Monday of Wednesday next week. Another thing I'm forgetting, take a much bigger picture. Don't fight the Fed. Yeah. There has been reasons in the past where leadership may have given you the reason. There is no reason at this point that leadership is pointing for to take that risk. None. So between the Fed and the way the indexes are shaping up and the way that leadership just kind of gave up the ghost last Thursday and Friday, unless you've got core positions with giant profits that can handle a big sell-off from here without really making you upset to your stomach and, costing you your sleep. Other than that, I'd have to say cash is king, I think is what we said today in our top 10 report. So, okay. So that's enough of my blabbing. Richard, I'm going to hand it over to you and see what you've got to say.
Yeah, on my side, nothing too much to add. I think you covered it well. We don't want to be kind of fear-mongering here, putting these longer-term charts and saying, it'll come down here. No one knows what's going to happen. It could put in a big upside reversal Monday, like Ross talked about, and we could start to see all those leaders kind of shaping up. But you want to keep that longer-term perspective. What could the market do? How will you respond? How will you manage risk? All those are key questions to ask yourself. And if the market does continue to sell off, keep in mind that you should actually encourage that and be very optimistic, because that's going to set up such a amazing rally full of amazing opportunities once we finally do get that upside reversal, that fall through day action, and that next uptrend, just because corrections set up the best bases and set up those powerful runs like we saw back in 2020. So don't be too pessimistic. Protect yourself, protect both your financial and mental capital, and just focus on keeping an eye on things, keeping an eye on leadership, how it's shaping up, and identifying those stocks that are showing relative strength. Do that homework so that when we finally do get that uptrend, you're ahead of the game and ready to put your capital work in those best opportunities that are showing the best bases and breakouts. So with that, Ross, anything to add on your side?
No, I'm glad yep. I didn't, if I got too negative on you there, no, I really appreciate you saying that. You got to, let's look back here also. We can see an insane drop of a similar nature right here, and you can see how quickly we can also recover if that happens. And to be quite honest with you, a nice clean out like that shaped up, not in we don't want it to happen too quickly, right? That's not healthy either, but it wouldn't be the end of the day. And it's worth keeping in mind that even if it did fall that much further, there's really nothing wrong with it right? So
Yeah.
again, it doesn't have to get anywhere near there, but for perspective, we just wanted to point that out. I mean, you're still ultimately in the uptrend that began in 2008, even if you came all the way back for a retest of 10 grand. So
Absolutely. And we could also just kind of chop around, just kind of slowly drag down. So don't feel like it has to do this sun drop. Once again, the market is going to do what the market's going to do. We don't have to we don't have to predict. All we have to do is analyze in real time what the current trend is. And right now, pretty much on all time frames, we are in a downtrend. So protect yourself. There's definitely some money to be made. In terms of absolute volatility to the downside, if you're a fan of shorting. If not, cash is a position. And with that, thanks so much for watching. If you did enjoy this, please go ahead and leave a like down below and subscribe if you're new to the channel. And we'll see you guys in future videos. Thanks.